Now, I do want to start with some of these apparel companies, particularly the ones that I think a lot of investors had kind of seen as a bit of bulletproof, kind of like the Lululemons of the world, some of these luxury brands, which seem to have shown a great deal of resiliency. But we've also started to see some cracks there when it comes to that growth trend of consumers continuing to spend.
That's 100% correct. The luxury spender, let's call her or him over $100,000 in household income. We've been seeing evidence of this through the Barclays credit card data since holiday. So the November, kind of December timeframe, which is purely discretionary spending, we've seen them pulling back double digits since that time period. And remember, right, that 100,000K cohort and above is about a third of the of the households, but it's about half of the household spending. So when they go, that's where the economy goes.
Is there any sense, and that's a good point too, is there any sense here though that rather than this sort of, I guess, be a wholesale, everyone in the industry sort of takes a hit, that there will be some folks where maybe that some of the money gravitates to or sort of pushes to? Basically, who are the winners, I guess is what I'm asking.
Yeah, so you're absolutely correct. In any kind of pullback in a consumer recessionary environment, a consumer spending slowdown, there are always winners. What we like to say is that 80% of companies are going to follow the trend, right? That if the tide is ebbing, right, sales are pulling back, you have to be very company specific and very brand focused in order to kind of beat that. One of the names that we absolutely believe is beating that trend is going to be Lululemon. We've continued to see kind of full price selling coming from them in a sea, and I do mean a sea of promotional activity from kind of your midline retailers, specialty retail, all the way up to your high-end department stores, Neiman, Saks, Bloomingdale's. So to rise above this is really quite a feat. Lululemon, Nike's always a great play here. And I think what we saw from LVMH the other day is that China, you want to be playing somebody who has China exposure because North America is indeed slowing.
We'll talk a little bit more about Lululemon and sort of their presence overseas, because I think of Lululemon and I think of all my friends in the U.S. who love Lululemon. When it comes to penetrating other markets, how much runway do they have there?
So their international business, at least in their China business in particular, is less than 10% of total sales. So their North American, Canada, and U.S. business are still the vast majority of sales. Within the U.S. and within North America, they're still growing categories like men's, accessories. They're expanding into new categories such as golf and tennis and footwear. So there's a lot of runway even within the U.S., but I think you're absolutely correct. Where we see kind of bigger margins and margin accretive growth tends to be outside of the U.S. and primarily in the China market. Remember, they've been opening probably 30 to 40% of their new stores in China during the past 3 years with all these issues in China. So, we always talk about China recovery plays. Clearly, Nike is one of them, but I think Lululemon is a sleeper China recovery play as well.
And so if 80% of companies follow the trends, 20% defy it in some way, Lululemon to the upside, who might disappoint? Who might underperform within that 20% cohort?
So think about it this way. Think about anyone who is selling a commodity good and sort of pre-pandemic had not shown brand strength. So in that cohort, we cover, we cover Gap, we cover American Eagle, Urban Outfitters. And I'm not saying that any of them has bad brands. What I'm saying is that the substitutability of the product that they sell can be deemed to be somewhat commoditized. I also think that the winners in this space are going to be your off-price retailers. Very similar to 2008, 2009. When the tide went out, it did go out for everybody, but they only had 1 to 2 quarters of a flat to negative comp. And then they rebounded very, very quickly because of the pressure on that consumer and the trade down mechanism that happens with off-price.